And joining us now to discuss the US-EU trade deal is Daniel Lacalle, chief economist at Tressis and author of the book Freedom or Equality. Good afternoon, Daniel. Good to see you again, as always. So, is this good news because it averts further escalation in trade tensions? What are your thoughts?
Well, to start with, thank you very much, Don. It's the end of any type of trade war. It's a great deal. It's very positive for the United States. It's incredibly positive for the United States, considering all that we had heard about the European Union unwilling to negotiate any of its non-tariff barriers. The European Union is going to negotiate the non-tariff barriers, is going to accept 15% tariffs, is agreed on a zero for zero tariff on very strategic sectors, is also increasing massively the investment in energy and in military equipment. All of those are elements that are very, very positive for the United States, that are going to level the playing field in the trade between both economic agents. And what's most important, it is also very good for European consumers because it lifts a lot of those barriers that were burdening economic growth in the European Union itself, and it benefits consumers by bringing more products from countries, in this case from the United States.
Okay, I want to go deeper into some of the points you mentioned just now, but first, for those of us who've been following this deal between the U.S. and the EU, it's sort of like a roller coaster ride, right? Because Trump paused it and then continued it and paused it again. So how would you characterize Trump's overall approach to this deal, and how does it compare to, sort of past EU-U.S. trade agreements?
Well, it's been a complex deal. It's also a historic deal, so that is logical that it makes it more difficult. But we must remember that the European Union's position relative to the Trump administration was uh, surprisingly very, very negative from the very beginning. You have to remember that the European Commission leaders were giving very, very negative messages about the Trump administration, not just on trade, but the Trump administration in itself. So that obviously made things quite tense. Also, the media narrative didn't help because we read everywhere that the European Union would not accept any type of deal, that the European Union would not negotiate anything, that they would take retaliatory measures if there were any tariffs imposed. What we have seen is a very typical Donald Trump negotiation tactic, which is to be aggressive and at the same time fair and firm. All those things were helpful. And obviously, the European Union negotiators have also taken into account the messages coming from entrepreneurs and from businesses all over the European Union that were mentioning that the trade deal had to go ahead. And when the China and Japan deals were in place, obviously the European Union had to accelerate a deal, because if the European Union had not signed this deal, which is very positive for both, the UK and Japan would have immediately absorbed a significant chunk of the level of trade globally that the European Union currently enjoys. So I think it was a strategic position from the side of President Trump to negotiate deals that would at the same time be a blueprint for the other deals that had to be negotiated, and that accelerated the domino effect. The first one was the UK deal. We talked about that. It's a very, very positive deal that immediately made Japan, Philippines, Indonesia, so many countries look at that and say, hey, we need to wise up. We need to wake up very, very fast because we may lose a lot of trading opportunities. And the same thing happened with the European Union. And it's a very good deal for the EU.
Okay, so you're saying it's a good deal for the US, and you're also saying, is it an equally good deal for the European Union?
Well, obviously, I can't say equally because it's headline. It's very evident that it's an incredibly good deal for the United States. Okay, but that is obviously something that we see because of the 1.3 trillion of added investment from the European Union, from the 15% tariffs, from the zero for zero tariffs, etc. But what we're likely to see is that the European Union benefits in a less headline type of way. For example, strong partnership in energy, in defense, and in technology with the United States, which can rapidly boost the economic growth and investment opportunities within the European Union. Second, it has not delivered any headlines, but the decision of the European Union to start negotiating its non-tariff barriers is an essential part of an improvement for the European Union itself, as the ex-president of the ECB, Mario Draghi, outlined a few months ago, almost a year ago, in the Draghi report that basically was ignored by a lot of bureaucrats. So for the European Union, the benefits may seem less headline grabbing, but they're very significant considering the lack of leadership in energy and defense and in technology. And this partnership certainly accelerates an improvement in the three areas, but also in the automotive sector, in agriculture, in farming, and in chemicals.
So, Daniel, in my opinion, I think you're the exactly right person to talk to about this EU-US trade deal. So, can you give us more insight then? I want to hear more about the internal dynamics of the European Union through this process of negotiation, and then finally cementing this deal.
Well, I think that at the beginning, there was a very aggressive position from the European Commission stating that they would not negotiate anything and that basically they would not accept any type of tariffs and that they would impose retaliatory tariffs. I think that a key element in accelerating this deal has been the position of Germany and of Italy. Germany and Italy that understand global trade, that understand the significant challenges that exporters face within the European Union and the opportunities that a strategic partnership with the United States can bring, were instrumental in changing the position of the EU negotiators. France as well, very important, because let's remember that France is one of the countries that had been purchasing more liquefied natural gas from Russia. So the agreement, which brings more investment from the United States and therefore more energy from the United States, is a positive for France as well. So all in all, I think that what has happened is that business leaders, some of the political leaders, have started to, let's say, take action in order to tell the negotiators that they had to reach a deal that was positive and at the same time that was realistic. Because what you could not expect after there was a trade deal with China, with Japan, with Indonesia, with Philippines, with the UK, one, you could not expect the world to be in a sort of isolation relative to the European Union. And obviously, all of those exporters were thinking, hey, once Japan, the UK have signed a deal, we have to sign a deal because it's very important for us to address our working capital challenges, continue to export to the United States now that the bluff of saying that we will find other markets and that we may sell our products to Brazil, obviously was had no merit. No, and this is an important factor. So I would say that at the beginning, the position of the European Union was very, very aggressive and even confrontational. And it's interesting because the European Union had the easiest trade deal of them all. The only thing that the European Union would have to do was to go and to implement a lot of the recommendations of the Draghi report, the ex-president of the European Central Bank, because those coincided 87-90% with what Howard Lutnick's demands were, no? Lift non-trade barriers, lift those enormous tariffs against chemicals, against the automotive sector of the United States, against agriculture, against farming, all of those things. So I think that gradually the role of Italy, the role of Ireland, and the role of Germany have been instrumental in making the EU be more realistic about the situation. And once the deal with Japan was closed, it was evident that they had to go out and accelerate a good deal like this one is, because the alternative would be the demolition of the exporting sector in the European Union.
Daniel, I always like to bring in the China angle to our interviews. So before we wrap up, let me just ask you one question about that. It seems like in recent times, both the US and China have been on the EU's case about tariffs. So give us your comments on the relationship, the dynamics between these three parties. How is China looking at this after the deal is completed?
This deal between the United States and the European Union is certainly a blow to the Russia-China strategic partnership, because obviously in the energy part, it is leading to higher investments from the European Union in energy, and obviously more imports of liquefied natural gas that go against the interests of Russia. But it's also a blow to the Chinese aspirations of becoming the technological partner of the European Union. Because in the agreement with the European Union, the United States becomes the strategic partner in chips for artificial intelligence. So, for China, obviously, is going to continue to be a strong trading partner of the European Union, but it's certainly going to make it very, very difficult to achieve that sort of long-term strategic goal of separating the EU from the United States, of confronting the EU and the United States, and also presenting itself as, let's say, the reliable partner in technology. That is obviously gone with this trade deal, and also very negative for the Russian energy sector, certainly.
Okay, Daniel, always great to hear your insight. Thanks again.
Thank you so much. Have a good night.